Hello and welcome to Stewarding Family Wealth on Business RadioX. We are broadcasting live from the Subaru of Gwinnett Studio, and I am your host, Randy Brunson. This series is presented by Centurion Advisory Group, serving individuals and business owners who choose to live on purpose. This afternoon, I am joined by Sandy Leroux, the lead advisor of Centurion Advisory Group, and Stephanie Sandridge, our operations manager. And they will be joining us today for a discussion on one of the key principles of handling cash flow. If you've followed us much at all, you are aware that we teach 5 basic principles of handling cash flow. Here they are. Number 1, spend less than you make. Number 2, always have a reserve. Number 3, avoid debt. Avoid debt just like you avoid this virus. Okay. Number 4, make and implement long-term plans. And number 5, choose to be generous with your time, your talent, and your treasure. Today, during this session, we are going to talk about the first of those 5 principles, which is spending less than you make. Embedded in that statement is the assumption or the expectation that we know how much we spend. So let's talk about how do we figure out how much we spend, and we're going to share some stories. Sandy and Stephanie are going to join me here shortly, but we're going to share some stories just based on our experience and what we've seen with some of the company owners and some of the households that we've served over the years. And I'll refer to my friend Jim. Keep in mind that these names have been changed to protect the innocent, but the stories themselves are very, very real. Okay, these are actual clients that we serve. First is Jim. Jim owns a business. It's a business services or professional services firm with about 10 employees and about $2 million of annual revenue. Okay, and Jim's he's a technician of the first order and a master of the spreadsheet. He's a spreadsheet guru, and he has a color-coded spreadsheet. I've seen this thing; it's absolutely massive. Okay, but their firm has about 4 or 5 different categories of revenue. And so he has every source of revenue assigned to a specific color. And then he has his expenses tracked in excruciating detail. And that includes his payroll expense. So he knows exactly on any given day, week, or month how many minutes or hours this particular staff person works on this client project or this client challenge or whatever, and so he can assign those minutes of expense specifically to a particular source of revenue. And so he tracks the data that he tracks to determine profitability of each dollar of revenue and the profitability of each employee and how much they add to the bottom line. It's a work of art. I'm a spreadsheet nerd, so for me it's a work of art, but it's just this beautiful thing. So Jim tracks detail to that extent, and he doesn't go to quite that extent on the household expenses, but it's the same approach. He knows what they spend, because in order to spend less than you make, it is absolutely critical that you know how many dollars are coming in and you know exactly where they are going. Every dollar should be assigned a task. Okay, there should be no unassigned dollars. And so in my mind, the miscellaneous category that may exist in your personal budget, or if you're a business owner, if you have a miscellaneous category, with all due respect, that's laziness. Okay, that's I was told that by one of my mentors, my business partner, who described a miscellaneous category as laziness, and I didn't really want to hear that because we had a miscellaneous category. So it's like, I listened, and after the meeting, I went away and scratched my head and said, yeah, he's right. So we fixed that. There's no miscellaneous categories. Every dollar must be assigned a responsibility and be charged. If it's an expense dollar, that expense dollar must be assigned a responsibility for generating a return that's more than that dollar deployed. And the same way in your household, because there's 3 things you can do with money. You can give it away, you can spend it, or you can save it. Okay, and so to spend well or to allocate well, we must be intentional about, okay, are we going to save that dollar, spend that dollar, or give that dollar away? And then when we spend it, be intentional. Yes, let's spend this to build relationships within the family. Let's spend this to pay taxes, so on and so forth. So that's be aware of what that looks like. Sandy, we were talking before the show started, and you were sharing a little about your story. Would you fill us in on that? Just tell us more about that, what some of the experiences you've had and what you've learned in that.
Well, initially, early in my marriage, I had software that would download from our bank account, and we tracked our spending against a budget back then. Then years later, my husband had an accident, and so we had to kind of change the way I process things. You could still download things, but it was really needing to make sure that each dollar I earned was assigned specifically to a category, as you were saying. So I went so far as to having a paper calendar and wrote out my expenses, and most of them I could equate. I had mostly fixed expenses, and so I was able to assign those according to my pay period, so I could make sure that rent was covered, that I was able to pay my power bill, my gas bill, all of those bills were covered first, and then also making sure that I had enough money to take care of my 4 kids and making sure they had food and were able to do what they needed to do through school or whatever, and then my husband's medical bills. So I had to make sure I managed my money so that there was enough to cover all of those expenses, and I was able to do that. It was a great thing. I don't recommend it always, but but it worked. It was really a good system for me.
So this is during a time where there's a family-owned business. Y'all were doing well,
Yep.
living the life, gated community, the whole deal.
Yep.
And Bobby was almost killed. The business went away.
Yep.
You were the only income. There were 4 children in elementary and middle school, and whatever you made was it.
Yep, that was it. It was all me.
Yeah,
It was a big change.
Yeah. And so you went out to eat every week, right?
Oh, yeah, before that. Oh, yes.
But after the accident.
Oh, after the accident, we didn't go out to eat. We actually stopped. It became a treat. I'm glad you reminded me. It became a treat when whoever's birthday was coming up. That was the day we would go out to like an Outback Steakhouse, which was a huge extravagance for us. And, we found ways to be financially savvy when we went to a restaurant. But yeah, that was a treat. And so we looked forward to it. Otherwise, we did not eat out. We ate at home. I cooked every meal. We didn't eat fast food. I mean, it was a definite change of pace because it wasn't uncommon before that for us to eat out often and picking up food when we'd leave school. So it was a big change for us to budget that kind of expense later on.
And through all this, though, you're relatively debt-free. I know you have a mortgage, but
Yep.
the 3 of your 4 children are Georgia Tech graduates. They're all off the payroll. They're doing
Yep.
well individually. And have they shared anything with you over the years about what they may have learned watching you through that experience?
Yeah, actually, they all manage their money really well. They didn't notice it as much until they started working themselves, and they know to save and be very intentional about what they're doing now. And so they all make sure they have their expenses covered. They make sure they have enough money to pay all their bills. Like they're having to budget to pay off any kind of student loan they may still have. They're doing really well, and they're actually, matching it. They're putting as much in their 401k or more than what the match is. So they've learned a lot, and they're definitely. It's funny. One of my daughters, the other kids say she's really cheap. Because she's so planned out about how she has her money split up and where that money should go. So I'm proud of them. They're doing a really good job with their money, and they learned a lot by watching me go through that.
Yeah.
Honestly.
Good. What a great example you've been to your children, and I know you have been. So thank you for sharing that story. I know. Think of that. Sandy and I were visiting with one of our clients the other day, or a couple of weeks ago. I'll call him Mark, and Mark's an attorney, been an attorney for 35 years. And partner in an international law firm. And so Mark tracks expenses on a spreadsheet, not to the extent that Jim does, but it's household revenue is what it is. His earnings are household revenue. There's no business revenue associated here. And he has a spreadsheet, and he uses categories. Okay, there's a category for housing where he lists all the mortgage payment, the utilities, and the variety of expenses that go along with maintaining a home. So he's got that category. And then he also has the personal discretionary, the clothes, the haircuts, and the groceries. The groceries aren't discretionary, but it's a different category than housing costs. So he's got that category of personal expenditures. Okay, then he has a category for benefits. The dollars that it's the benefits and long-term planning category, and he actually breaks those into two separate categories because they're sort of mandatory benefits through the employer and is maxing out his K plan and so on and so forth. And then he has a category for taxes, for income taxes, and then he has a separate category for, in his case, with 3 daughters, he has a one specific category for weddings. Okay, there's a specific category for weddings, and then he has a category for long-term planning, wealth building, retirement prep, some of those kind of things. Because he not that he plans to retire, he just wants to step away. Okay, it's a demanding environment, and so those are his categories. But when he allocates, okay, he allocates in increments of $100,000. So $100,000 for this, $100,000 for this, $100,000 for this, and $100,000 for this. So, all of us come from different situations. There are households that might be listening, and they allocate $10,000 at a time. There are households that allocate $100,000 at a time or $1 million at a time. And, the facts and circumstances of lives vary greatly, but the principles don't change. Those kind of things. So Mark, when he allocates, he just allocates $100,000 at a time. We've had that conversation of it's fascinating to learn the different ways that people interact with this. But whether it's Jim or whether it's Mark or whether it's what you've done, they have all been effective ways of thinking about the expenses in every situation. In Sandy's situation, Jim's situation, Mark's situation, they know what they are spending. So Stephanie's with us for the first time. Stephanie is our operations manager. It's mostly behind the scenes role for her, but she just does phenomenal work at workflow process, managing our tech stack, our IT, our compliance related issues, HR, some of those kind of things. So Stephanie, we talked about this earlier. Just for you and in your household, over the last 20 years or so, what's been your experience?
Well, so I'll be honest, initially we didn't really live by a budget. We lived less than our means, but I didn't have things specifically categorized. So what I have done more recently is, and if I can say, I'm just a little bit younger than you guys. Sure. Not a lot, but just a little bit younger.
There she goes, rubbing it in.
No. But I engage with this kind of thing just a little bit differently. So I have found an app that I like. And it's funny, I was laughing earlier as you were talking because several of my notes, you've already made those points. So I'm just going to say them again.
Sure.
But what I have found works well is every dollar has a job.
Yes.
Every dollar has a job. If there's anything left over, you still need to assign that penny to something. Just be really intentional about that. So that's helped me kind of know where where's my money going. And then the other thing, it forces me also to make the plans and set aside money for short-term goals, long-term goals. And you also said, spending and saving and giving. And kind of being aware of your expenses will also tell you kind of what you're making a priority in your life. And if you need to make adjustments, if your pocketbook, if your checks, or, we use debit cards or credit cards now, if those expenses are not reflecting really the kind of lifestyle that you want to live, then there's an opportunity for you to reallocate and make some changes.
That's outstanding input. That's outstanding because I remember having a conversation with a young lady. I'd met her somewhere, I don't know, probably a chamber event. We got to talking, and she said, I'd like to come see you. And she was 30 and single, and we sat down and talked, and I challenged her. I said, okay, love to help. It's one of those pro bono situations. I just trying to figure it out, and I wanted to help, right? And I said, let's start with this. I said, pull 12 months of bank statements. You can save them in PDF, send them to us, and I'll print them, or you print them, but let's get together and let's just look. Let's figure out where you have spent your money over the last 12 months. Because she was struggling financially, okay? And never heard from her again. And sometimes people assign themselves, there can be things like guilt, shame, and doubt. Oh, I didn't do that well. Okay, well, all of us can look back across our lives and say, didn't work the way I planned, or that didn't work out, or that wasn't a good decision, or that was stupid, or whatever. We've all had these experiences,
Yes.
right? All right. But that doesn't diminish who we are unless we allow it to.
Right.
Okay. So you look back across, okay, so what can we learn from this? Let's take notes. Let's do something different, exactly what you were saying. But you've heard of the Stockdale paradox. Admiral James Stockdale was in the Hanoi Hilton with John McCain. All right. And if you do not know the Hanoi Hilton, I urge you to study your American history. Okay? So he was in the Hanoi Hilton with John McCain and later taught at Stanford before he retired. And he said that the first thing that you must do to make any progress toward a goal, personal business goal, is be brutally honest with yourself about exactly where you are.
Yes.
Okay? Now, financially, that's pulling a financial statement. What do you own and what do you owe? And evaluating how you spend your money. And when you spend your money, that's not good or bad or right or wrong. Those aren't judgment calls. That's just how you spend your money.
Right.
Okay? But to your point, Stephanie, in order to make any progress in life requires intentionality. You must be intentional. Okay? And so if you're going to be intentional about making progress financially, you simply have to be aware of, okay, how have I spent my money? Let's take a look. Okay?
Right.
Then once you do that, you can go down the checklist and ask the question, is this how I want to spend my money?
Right.
Do I want to spend money on that? Do I want to spend money on that? If you enjoy eating out and it brings you a lot of pleasure, you like being with people, and it fits the allocation, the way you like to spend your money, do it.
Yep.
Okay? If you want to subscribe to the premium package from whoever I think cable's sort of outdated, but however you get your media feed, whatever it looks like, if you want to spend money on all the premium channels or all these different things where they stream stuff to you, if that's meaningful to you, then do that. You know, those are not right or wrong or good or bad situations. Those are simply personal choices. Okay? Choice is sacred, but you've got to be aware of that, just like you said.
Right.
Oh, and I know for Teresa and me, she has an accounting background. She does accounting. I do finance. Accounting is backward-looking. Finance is forward-looking. So the way we've sort of divvied up internal responsibilities is she handles operations and maintenance. I handle new business development, long-term planning. Okay, both from a business perspective and from a personal perspective. She keeps us informed about what we have spent. And I do. I know this will surprise you, but I have a spreadsheet about our expenses, and it's categorized sort of like Mark has done. It's categorized in major categories. But when I think about allocation, what Teresa and I have chosen to do, and as a result of the journey of our lives, charitable giving is very important to us. Okay, and so I've divided our cash flow, whatever our annual cash flow is, I've divided it into 5 20% buckets, okay? And so the way we divide our cash flow is 20% goes to charitable giving. We allocate 20% to taxes. I've long believed that I've always wanted to give more to charity than I have to pay in taxes, where because taxes is involuntary giving and charitable giving is voluntary giving. Think of it. Taxes are forced extractions. There's certainly a place for taxes. I'm not discounting the paying of taxes too much, but it's 20% to charitable giving, 20% to taxes, 20% for housing, and whether that's a mortgage or all the other costs associated with maintaining the home, and then 20% for personal discretionary, and the last 20% is for long-term planning, wealth building, saving, investing, those categories. So that's the way we've done it. In all these examples, the stories you've shared, the stories we've shared with some of our people, those are not right or wrong answers. Those are decisions we make, but all of us have chosen to be intentional, which is you've got to be intentional about, okay, what are my expenses? Like you said, Stephanie, is this what I want to do with this money? And assign every dollar, every penny a job. Wrap up with a story. This goes back to my mother's dad, okay? My mother's family name was Adams, and her dad's name was Clifford, or Cliff. Went by Cliff. Actually, his nickname was Stone, all right? And he was solid as a rock. And but I'll refer to him as Cliff just for the sake of the story. But born in 1913, by 1941, he was married, had 3 children, called up to go to war, Fort Lewis, Washington, Philippines, in the Army during World War II. He was in his 30s, married, and had 3 kids when he was called up, rather than being 17 or 18. All right. While he was gone, the middle child, which is the younger boy, or the older boy, Harvey, got sick. And it wasn't just a sore throat or the seasonal flu. It was a life-threatening illness. So when Cliff came home, he got a job working shift work, repairing airplanes. Okay, he worked for McDonnell Douglas, repairing airplane wings. It's a skilled trade, but he worked shift work, drove to Tulsa and worked shift work. And I remember him telling the story. At the time, they did not have a car, because he said that Harvey's very sick, okay? And Harvey's medicine cost more than his entire paycheck, okay? And he said, so he rode to work with a guy, gave the guy a couple of dollars for gas, didn't have a car. And at the time, they had lived out in the country in rural Oklahoma, close enough to drive to Tulsa, drive to town to work. And they kept cows, they kept milk cows. And he would milk the cows, skim the cream, and they would save the cream and put it in these big 5-gallon metal buckets. I'm not going to describe what they look like. If some of you came from rural America, you might know what these 5-gallon milk buckets look like, but they have a lid that you push down, they have handles on the side, but they were these 5 and sometimes 10-gallon milk buckets. And Grandpa said that he would take that cream, they would save the cream, fill up the can, take the cream to town, to the small town they lived in. It was about 30 miles outside of Tulsa. He would take the cream to town. He said when he went to town, on the weekends to buy staples, he said he owed money to every person that he saw. Every shopkeeper in town, he owed them money. They'd extended credit. The Adams family had been there. He was the second generation there. Okay, his parents came there in the late 1890s before statehood. So he knew everybody, and he owed money to everybody in town. Everybody they saw, he owed money to. But he would take that cream to town and sell it, because it had value. It could be resold. It could be broken down into smaller units, pints or whatever, and be resold. And that cream for him had great value because it allowed him to buy staples, flour and sugar, and other things that he and Grandma needed to run their household. And he said in the late 40s, on one of those trips to town, he had a team of horses, 2 horses and a wagon. That was his mode of transportation, because they didn't have a car. And he said he was on his way to town with 2 cans of cream, and something spooked one of the horses, and it bolted, and it jarred, everything, jarred the wagon, and it tipped over one of those cans of cream. And he said he sat there and cried, because that cream was so incredibly valuable for making provision for his family. During that time, he developed the habit. You may have seen these small pocket notebooks that you put like in your shirt pocket, with they're spiral bound at the top. And during that time, he developed the habit of tracking his expenses to the penny every day. And I still have some of those small spiral bound notebooks in my possession. Some of them have come down to me. Some of their other things have come down to another cousin, to one of my cousins. But I still have some of his things, and it includes one of those notebooks, and you can look in there, and there's an entry where it says Polly. My grandmother's name was Pauline, and she went by Polly. And Polly, $3.25 at the grocery store, or 10 cents for eggs. They would buy eggs from some of their neighbors that had chickens, and literally every penny that they spent. If he gave Grady, the guy he rode with, he gave him $1 for gas, or if he filled it Grady's car up with gas, every penny was recorded in these little pocket notebooks, because he owed money to everybody he knew. And then Harvey, as a young teenager in about 1953, passed away. And from that time, though, we have pictures. We have 8mm. It's probably been converted to video now, but there's 8mm video, or whatever you call that, with those old cameras from the 50s and 60s, and some other single picture, frame pictures of trips they took, because Grandpa paid off everybody. He got everybody in town paid off. Of course, after Harvey's death, which is a huge loss for them. Anytime you lose a child, you're supposed to lose parents, but losing a child it impacts people the rest of their lives, right? But financially, he developed the discipline of tracking his expenses. And so from 1953 to 1974, when he retired in 21 years, he was able to set aside enough money had a small pension plan. He had Social Security, but was able to set aside enough other money that their home was paid for, and he had some other funds set aside so that he and my grandmother could enjoy the 25 years after their retirement before they passed. And so, but that's what he learned through that. So I could tell you story after story. I am going to stop. I'm not going to continue to tell you stories about Cliff or my grandpa. But, we all come to the table with different experiences, but mastering the art of tracking your expenses is so valuable. Any final comments, ladies?
Just be intentional.
All right,
Yeah.
Good. Thank you both for participating with us today. Thank you so much, my friends, for joining us on Stewarding Family Wealth today. That's been presented by Centurion Advisory Group, where we bring perspective, processes, and purpose to families who wish to build wealth, transfer assets and values across generations, give to causes meaningful to them, helping them reduce their tax bill and invest in ways that align with their values. Don't forget to enjoy these episodes. You can find them on Business RadioX. You can also download from Apple iTunes, iHeartRadio, Spotify. You can find it under Stewarding Family Wealth. That's it for this session. We will talk to you soon. Thank you.